Did you know that you could literally be making a living using this one candlestick strategy? Yes, you can, as I'm going to show you in this video a detailed version of how you can use this one candle strategy to make a living. I'll be covering all of the concepts and all of the procedures that you need to know as you are trading this one candlestick strategy. Most of you asked me questions concerning the one candlestick strategy in the previous videos, and in this video, I'm going to explain to you everything that you need to know. And also, I'm going to include some of the things that I did not cover in the previous videos. So please stick with the video till the end and make sure you follow the video in detail so that you don't get confused as you're trading this strategy. Without wasting any more time, guys, let's go over to the screen so that I can show you how you can trade this one candle strategy effectively. So I will be covering the following in the video. We'll be looking at higher time frame single candle markings. We will also be looking at the general trend of the market using a higher time frame. Okay, we'll look at that because some of you asked me, do you consider the trend of the market when you're trading the single candlestick strategy? Yes, we consider the trend of the market just to get ourselves on the right side of the market, because you know trading on the side of the trend is better than trading against the trend. So yeah, we consider the trend when we are trading this single candlestick strategy. We will also be covering the entry time frame and the rules that we are going to be following for this strategy to work very effectively. We will also be looking at combining the candlestick high and low strategy to this very strategy to get better entries. So I'll also combine another strategy that I've shared with you guys on the channel to see ourselves get better entries with this strategy. Okay, we will also look at an alternative entry using Fibonacci retracement. This was suggested by one of you guys, so I'll try it out for you guys here to see how that will work out in this strategy. Also remember, as you watch this, please pay attention to every detail on what I am explaining so that you can use this candlestick strategy more effectively. So as you can see on the chart here, I've drawn some illustrations. So let me start from up here because yeah, this is where I've had my first illustration. So for the trend of the market using the candlestick, single candlestick strategy, you want to consider the higher highs, higher lows, higher highs, higher lows of the candles, not of the market structure itself, because there is market structure highs and lows and there are candlestick highs and lows. So here we are considering candlestick highs and lows. Remember, candlesticks also have a high, a low, a high, a low. Okay, so you're considering these highs and lows to be candlestick highs and lows. Okay, so you're only going to trade, for example, in a selling market, you only consider to sell or use the single candlestick strategy selling the market when the candlestick high or low of the previous candle is broken and a potential trend is unfolding. For example, here represented in green are the bullish candles, highs and lows. So when the low of the bullish candle right here is taken out by a bearish candle, this red represents the bearish candles highs and low. When the bearish candle takes out the previous bullish candles low price, you consider that that trend could be changing, and then you go down to the time frame where you're going to be looking for your single candlestick. Now this trend here, you're looking at it at a very higher time frame. Okay, for example, if you're going to look for your single candlestick formations on a daily chart, this structure here is on the weekly chart. So you're looking at the weekly chart for this break to happen or a trending market to be unfolding. Then you can come down to the daily time frame, which is represented here by these highs and lows. Make sure that the previous candles are all bearish. For example, the last two candles from this break here are all bearish. Okay, and then on the third candle, you want to start looking for your strategy rules to play out, and then this is how you are going to enter. On the daily, this purple zone is where you're looking for entries, and now on the entry time frame, which can be the 15 minutes chart, this is how the entry model looks like. You're only entering within the purple zone. The black line here represents the high of the day. The black line down represents the low of the day, and the blue line represents the close of the bearish candle. Okay, so the purple zone is in between the close and the high of the bearish candle, which is represented here on the 15 minutes chart for the entries. Now, this illustration using candlesticks looks like this. Okay, so let's consider this is a weekly chart. Okay, this is a weekly chart for us to determine the trend. Now, this is what I was telling you, that you wait for the bullish candle's low to be taken out by a bearish candle, this one here. And then after that has happened, you know a trend can be starting to change, okay, to bearish. And then you don't just start selling from here. Wait for at least one more candle to close like here, okay? Then on this next candle here is where you're going to start to draw your daily high and daily low and close price on a daily chart, which is this next one here. Okay, this next one is the daily chart candles. Okay, so on the daily chart you can see that these three candles here on the weekly chart, which we used to determine the trend, are represented here, okay, by this movement. So on this last candle is where you're drawing now your high, your low, your close, and your purple zone, and then your entry time frame, the 15 minutes chart, you're entering using this model. As I told you, we are also going to consider using a Fibonacci retracement tool for us to get into a sell trade using this model. Let me clear the drawings, then we go on to the live chart now. So guys, we are on the weekly chart. We are on the weekly chart because for this example, we are going to look at getting the single candlestick on the daily chart. So we are going to start from the weekly chart to determine the trend of the market. Okay, now here we haven't gotten a third candle print, but this can still work. Let me show you how that is done. So we are going to be looking at whether the bullish candle here, the low, has been broken. Okay, so you want to wait for the bullish candle's low to be broken. You can see that that bullish candle's low was broken. You see this candle? Let me zoom in so that you guys can be able to see clearly. Okay, so the market was moving in an uptrend here. We had 1, 2, 3 weekly candles going up, and now last week we had this bearish wick closing below the low of that previous week. Okay, so now we confirm that the market could be turning around to go down. As you can see that this week, this current week we are in at the recording of this video, is printing a bearish candle. So on a higher time frame, which is a weekly chart, we're looking at a downtrend. Now what we do is we go down to the daily chart where we're going to look for a single candlestick to move down with this market. As you can see here now on the daily chart, that there are many daily candles that have closed bearish because the weekly chart closed bearish below this red line right here. Okay, you can see last week closed bearish. Okay, so today we're having a bearish candle printing below that red line, confirming that we are still moving down. Also, yesterday's candle closed bearish, and the day before that, which closed also below this red line on the daily chart, also closed bearish. So we are looking at a current bearish market on AUD/USD, which is pushing a bit lower. Okay, so what we do now is, this is the current candle. I cannot show you this on this current candle because this is the current daily candle which is printing this one here. Okay, so I can draw for you these levels or these zones on yesterday's candle so that we see how we could trade this today, this candle which is currently printing. All right, so let me remove this red line, and then we are going to mark yesterday's high. We'll make that black like this, and then we're going to mark yesterday's low like this, and then we are going to mark the close of the bearish candle, which is there. Okay, so we're going to mark that and make it red. Okay, so that red line is the close of yesterday's candle. So the zone between this red line and the black high line is where we're going to be looking for our entries. So looking for entries around this area here. So someone suggested to me that I should use a vertical line to show the close of that candle. Okay, a vertical line to show the close of that candle. But what I can do is I have an indicator here which can do that for us automatically. I've plotted this indicator right here. It's going to show us the daily open and close line when we go to the lower time frame, okay? But for now, we have marked the close of the previous day's candle, the high and the low. So now we'll go down to the 15 minutes chart and we see the entries we could get from that area right there, okay? So you can see that this dotted line right here, there's this dotted line you see here, this dotted line. Let's change the color of that so that maybe you can see it more clearly. Let's make it blue. Okay, make it blue so that you can see that dotted line is the daily close. Okay, that is where the market closed for yesterday. You can see this dotted line. It closed in that area at exactly 2 a.m. UTC plus 3 in my time zone. It closed. So when the market closed here, all right, the market also had to pull back up. Let me go back to the daily chart so that I can draw there a purple zone where we are going to be trading from, where we're going to take our trades from. So the purple zone has to be between the red line and the high of the previous day's candle. This is where we're going to enter our trades. We'll adjust it according to where the market closed when we get down to the 15 minutes chart. Okay, so we are here on the 15 minutes chart. So as you can see, this vertical dotted line is where the market closed exactly. So we'll move this purple zone to there. So that is exactly where the market closed. And then any candles to the right of this purple zone here like this, within the purple zone, that is where we're going to enter entries from within the purple zone. So as you can see clearly here, the market closed here, and on the 15 minutes chart, it pulled back up above the red line here. You see this red line, pulled back above the red line, and then gave us a good entry, which is an evening star formation right here. You guys can see. I know that this would be difficult for some people to trade depending on which time zone you're in, okay? But this would be a very good entry. This is a good evening star formation where you could enter your trade here. You could put a stop loss up there and then target the previous day's low, which is this black line right here, okay? And that would have been a good trade. However, some people would also put this stop loss above here, the previous day's high, and then target a 1 to 2, 1 to 3, whatever. That would take longer to play out, but nevertheless, this market is still moving to the downside, AUD USD. As you can see, even if you entered and put your stop loss there, you would still be in profit right now, okay? So that is the criteria you're going to use to enter using this strategy. Now, let us look at entering these trades using Fibonacci, all right? Let us try to look at how to enter using Fibonacci. Now, to use Fibonacci with this, you're going to look at the previous day's low before all these candles are printed. These candles to the right, don't consider them, okay? So we're going to consider placing a Fibonacci from this black line, which is the high line, to the low line, which is this black line down here, okay? And we are looking to enter the market around the Fibonacci levels, okay? As you can see, the Fibonacci levels, where the market went, was the 38.2 Fibonacci exactly. It went back to the 38.2 Fibonacci and then sold off from there. So still, this would be a confirmation, an extra confirmation using Fibonacci for us to get an entry right here at the 38.2 Fibonacci, okay? this is a good way to confirm an entry using Fibonacci. I'm really grateful to one of you who suggested to use Fibonacci. I went on and backtested using Fibonacci, and it gave me a really good or better accurate entries using this strategy. So guys, I don't want to make the video very long, but as you can see that this strategy can work for you depending on which type of trader you want to be. If you want to scalp, you can use this strategy. If you want to day trade, just go a higher time frame. Okay, go to a higher time frame, like for example a weekly chart. Then you look for your entries on the 1 hour or 4 hour charts. If you want to position trade, you go to the monthly chart. Then you look for your entries maybe on the daily charts and hold your trades longer term. Guys, this strategy is a strategy that I've seen many of my students and many of you guys here using to change your lives in trading. I hope this video helps iron out some of the questions, some of the doubts you had. If you still have some questions, please share them in the comment section down below and let us all learn how to use this strategy correctly. I'll not get tired of giving you guys more details on this strategy if you have any more questions. So drop them in the comment section down below and let us discuss. Thank you guys for watching. Until next time, peace and out.